Welcome to Stock Review. Appreciate you guys tuning in. Um, it's February 3rd, Sunday. Um, Go Patriots. That's all I have to say right now. um, no, I'm joking. Um, but I have a question for my fellow traders and just people tuning in and watching. Um, what do you base? What is your baseline when it comes to trading? Um, I'm gonna put this in terms of something that I understand real well, which is map reading, and um, there's shooting at as a azimuth and a back azimuth, meaning finding your location from an unknown point and finding your location from a known point. So it all has to do with finding where you're at on a grid. Not much unlike what we do in trading. It's not exactly the same, but it's something that I understand. And I've been trading without knowing really my grid. I've been coming up with trade ideas that have worked out. Luckily, without the MACD, I've been trading not using the KTJ, and I've been quite fortunate. Just having good intuition. Um, these particular charts have allowed me to take a lot of the guesswork out of it. There's still some guesswork involved, but not as much. Um, and I'm looking for that stability. I'm looking for taking out that guesswork. Um, and definitely not examining the Beige Book was a big no, as far as I'm concerned. Now that I'm looking at this, I could have foregone for, or just, you know, I could have been a lot less stressed, definitely, in my trading. So I thought I would just go over the Beige Book with you guys. As you can see, everything highlighted in the green is positive. Everything highlighted in the red is on the negative side of things. Things in the yellow are a mixture of both, I think. Not that green and red make yellow, but sort of tried to make it look like a chart of some kind, something that some people would be used to. And also, you'll get a gauge on mentally um, what's good and what's bad. And below that, everything's just in green because it's easier to read. Um, anyways, let's get to this. I want to make this nice and sweet. And next Beige Book is coming out sometime in March, and I'll be doing a similar show, um, going over it, reading it. I just think it's just a great idea. So, anyways, let's get started. Economic activity increased in most of the U.S., with 8 of 12 federal districts reporting modest to moderate growth. Non auto retail sales grew modestly, as several districts reported more holiday traffic compared with last year. Auto sales were flat on balance. The majority of districts indicated that manufacturing expanded but that growth had slowed, particularly in the auto and energy sectors. New home construction and existing home sales were little changed, with several districts reporting that sales were limited by rising prices and low inventory. Commercial real estate activity was also little changed on balance. Most districts reported modest to moderate growth in activity in the non financial service sector. through, sorry, a few districts, though a few districts noted that growth had slowed. The energy sector expanded at a slower pace, and lower energy prices contributed to a pullback in the industry. Capital spending expectations. The agriculture sector struggled as prices generally remained low despite recent increase in overall lending volumes grew modestly. Through a few districts noted that growth had slowed. Outlooks generally remained positive, but many districts reported that contacts had become less optimistic in response to increased financial market volatility, rising short term interest rates, falling energy prices, and elevated trade and political uncertainty. Definitely talking about tariffs. Um, the threat of rising interest rates and um, and lower gas prices. We know that Iran and a lot of countries are starting to do business with China and outside the dollar in RMB. Even though I was bullish on RMB and even bought the derivative ETF or ETN, it was I got out. Um, it just after a while it just became just idiotic to hold it. Um, it's not expanding as fast as people want to make it out to be. Totally. Um, Now we're gonna head down to employment. Okay, no, hold on. So here we go. Agriculture sector struggled as prices generally remained low despite recent increase. Overall lending volumes grew modestly through a few districts. Noted that growth had slowed. Outlooks generally remained positive, but many districts reported that contacts had become less optimistic in response to increased financial market volatility, rising short term interest rates, falling energy prices, and elevated trade and political uncertainty. Unemployment. Unemployment increased in most of the country, with the polarity of districts reporting modest growth. All districts noted that labor markets were tight and that firms were struggling to find workers at any skill level. Minneapolis indicated that construction firms had turned down business because they could not find workers, and Atlanta reported that a few contacts were either actively overstaffing or retaining employees through nulls and demands in anticipation of future growth. Wages grew throughout the country, with the majority of districts reporting moderate gains. Wages increased across skill levels, and numerous districts highlighted rising entry level wages as firms sought to attract and retain workers as new minimum wage laws came into affect prices. The majority of districts reported modest to moderate increase in prices. Most districts indicated that firms' input costs had risen, but reports were mixed on if they could pass the higher costs on to the customers. Um, on truck in here. Do do do. To the top of the page, my friend. Rising material and freight prices at sources of cost increase, and a number of districts said that higher tariffs were also a factor. While prices of most inputs were up, several districts noted that fuel costs had gone down. A number of districts reported rising home prices, while prices for commercial and industrial space either increased or were flat. Prices for agricultural commodities were generally somewhat higher. And this is the report that I wanted to get to. Um, I'm under the opinion that most of the traders that are the day traders and the retail traders that are trading nowadays are trading like idiots. And I see the Beige Book as a platform of what the government will support as far as any kind of quantitative easing, as any kind of lawmaking, um, as far and especially with this new administration trying to bolster business, this is what they're going to go to. To me, it made sense to structure my trades in these sectors. And I know this doesn't have communications. They don't address communications sector, and there's many other sectors that aren't addressed in the Beige Book. We're reading it right now. Um, so, but I think to any trading platform, you have to base it on this. Um, so, number one, retail sales. I bought eBay to cover just that sector of retail sales. It's a good company. It's doing well. It's a part of this online trend um, of buying things online instead of going to the store. Um, and as you can see there, I have the numbers here. Um, the consensus is that it's going to rise 0.2 hundredths. Overall forecast, retail sales is going up 0.5, percent. And also the forecast is 0.5%. It's all right here. Um, auto sales. It tells you right here. Um, this is in the millions, 17.6 million. Um, you can track it here pretty much. This is not in the Beige Book. This is something that I added on to the report. It tells you the previous, what's going to sort of kind of happen, what the consensus is of where it's going. Um, Definitely, auto sales should be a part of your portfolio. Um, as I keep on going down, let me keep you up. What I'm looking at down here. Um, New home construction, right here, right below auto sales. I went back into DRV. I have not chose an automaker as of yet. Um, Restructuring my trade, trying to or getting into these asset classes, diversifying, and also being on the right side of the trade took some doing. I was happy that I sold out on Monday, only to re enter early morning Friday. Um, that whole week, the market was doing this, what's been doing for the past 3 weeks, which is absolutely nothing. Fall 10%, gain 10%, 11%. This is absolutely going nowhere. Um, which sort of kind of pushed me to take a look at this. It definitely, government is involved in what's going on in the market, and I really wanted to see what were their priorities. Definitely. But let's go back to the information here. New home construction calendar. It's all right here. Um, Housing starts on 256 million, right? Um, we read the Beige report. It is slightly down. I sold DRV. I went back into it. I was in a bad position um, when I wanted to buy, you know, mid horizon. That was a no no. Um, Whatever I lost by selling it early, I gained it back by selling the stock and then re-entering the position later on that week. Um, and I gained it back in a half of a session. Um, Definitely. Um, so that definitely worked out. And DRV will be something to look at because housing starts are down from last year, and they're expected to be down. Um, let's get out of new home construction, existing home calendar. It's right here, my friends. There, right there. You guys got it too. Um, Now you see the two spots down at the bottom, they're empty. That's because of government shutdown. But last reported, it was 4.99 million um, housing existing home sales are doing okay. You know, and at the end here, commercial real estate, the Urban Land Institute. Most recent real estate economic forecast indicates that the U.S. commercial real estate market is for steady growth through 2019. Um, Five. A semi annual survey, according to Curved Projects, commercial transactions to hit 41 or 414 billion in 2019, down from 2015's 547 billion, but ahead of the 16-year average of 294 billion. The industry market, driven by e-commerce, warehouse, and data center construction, will lead other sectors with anticipated growth rate of 3.7% from 2017 to 2019. The suburban office market has yet to gain traction. I know that's true because right around the corner we have Facebook put up a building full of servers, um, and Fort Worth is booming as far as commercial real estate. There's big, huge Just another commercial building went up right over. I mean, I can see these things occurring right in front of my face. I mean, I can look out my window here and can see commercial property going up for several businesses. So I know this is sort of kind of correct. Um, and also, there's another commercial building going up right over here. So this that is I can confirm that. Let's get back. And I'm in the non-financial service sector. The global banking system is not only bigger and more profitable, but also more resilient than any other time in the last 10 years. I did not put the figure inside this report here, so you can disregard that. According to the bankers' top 1,000 World Bank's ranking in 2018, total assets reached 124 trillion, while return on assets stood at 0.9%. Similarly, Tier 1 capital ratio as a proportion of assets rose to 6.7%, significantly higher than in 2008. Um, but the recovery since the financial crisis has not been uniform across regions. U.S. banks, compared to their European counterparts, are ahead on multiple measures. You guys, what I'm reading here. Um, Aggressive policy interventions and forceful regulations help propel U.S. banks to health more quickly. And more recently, favorable GDP growth, tax cuts, and rising rates have further bolstered the state of the industry. Total assets in the United States reached a peak of 17.5 trillion. Capital levels are up as well, with average tier 1 capital ratio standing at 13.14%. Return on equity for the industry is at post crisis high of 11.83%. Efficiency ratios also are at their best. Similarly, on other metrics such as non performing loans and number of failed institutions, we're talking about the school loans, Fannie Mae, I think that's what it is. The U.S. banking industry is robust. However, the same cannot be said of the banking industry in Europe. Structural deficiencies, overcapacity, low negative interest rates, and the absence of pan European banking regulatory agency. I'm going to stop there. Pacific Euro banking, right? Isn't that what Trump and China's working on? Some regulatory laws and a few, yeah, basically on this new trade deal. I think it's going in the right direction, guys. I think everybody that's skeptical of a trade deal, um, nothing's easy. Nothing's easy. Um, and I'm optimistic about the delegation going to China, that they can get some of these things ironed out. And I think we're going to have a trade deal. Back to the report here. Um, Pan European Banking Regulatory Agency have all likely contributed to European banks experiencing persistent profitability challenge. Move on here. There we go. Seven, energy. Um, I'm looking to buy Chevron at the right time, and it's not now because the market's closed, right? Um, but we'll go over what I've done, and you'll see that if you base your trading on the Beige Book, um, you're going to have a little bit more predictability. And I think that's all in investing, day trading altogether. I think that's just what we're all looking for. Um, and it sort of kind of filters out all of the negative input. I mean, I understand that everybody wants to go the other side of the trade. I understand that everybody wants to hear the bad news and make their adjustments, but there's a point to where negative reporting is going to cause you to not be as confident as you need to be. Um, I'll just leave it at that for now. But seven, energy. U.S. electricity summary. A conventional, a conventional hydroelectric power only. Let's cruise down here and take a look. Not included in renewable energy includes electricity and heat generation, otherwise renewables, including biofuel production, losses, and co-products, retail prices. And I have it highlighted there. As you can take a look, I'm not going to read all that. I generally look at something like this as, let me scroll back up, as how much disposable income people are going to have for things like computers, um, instead of a basic model car, one step up, power windows, AC, sunroof, stuff like that. Um, the fact that energy costs are down may not be a total bad thing for the market, but directly investing in U.S. energy might be affected. You might want to transfer a percentage of your stock. Not that you're not holding energy, but you're not holding energy at such a high percentage. And you move that over to more auto or any other sector of your choice. So that's why I'm taking a look at this. Um, I see all this as options. Options on where you would want to put your money as far as investing. Um, Now we get down to agricultural. Let me get caught up here. I know this is long. I don't care. There's your ethanol, biofuels. Now we're down to agriculture, which is eight. I bought a tobacco company ETF because I know that there's a huge domestic market for cigarettes and um, I hate to say this, cigars, things of this nature. Um, there's a huge market for it. So if I was gonna go, or I when I went into agriculture, I specifically picked that ETF because I know it's not gonna be. I don't think Chinese are smoking Swissers, right? Even though I know they really like American cigarettes. So, um, agriculture, market volatility caused by President Trump, Donald Trump, trade disputes, extreme, and the potential spread of African swine fever could threaten the sustainability of global food commodity prices next year. The agriculture banking company um, Rabobank warned Thursday in a new report. Um, the ag commodity and this swine fever, African stuff, I think it's total bull, but I may be wrong. The ag commodity price environment may be relatively stable. Um, currently, but it's difficult to remember a time when there were so many threats to food commodity prices on so many fronts. And I'm just gonna leave that at that. That's just the truth there. American soybean farmers will continue to take the biggest hit if Beijing keeps tariffs in place, and that U.S. soybean stocks will easily double under that scenario. USDA Secretary uh, Sonny Perdue has said that farmers will not receive additional trade aid for 2019 production, reasoning that Trump's tariff policies have already altered markets and that farmers must now react accordingly. So, no more bailouts for soybean farmers. So, we know that now. We don't have to, oh, sit there and listen to hours of YouTube and people speculate if the soybean farmers are going to receive a bailout. They're not. They should have already made their adjustments. That's what the government is saying. Um, there's a little bit of El Nino in here. Uh, in addition, um, the report noted that climate experts are forecasting an 80% change of El Nino weather conditions being formally declared. I'm going to just skip through this. U.S. Southern Plains weather and can also lead to drier conditions in the north part of the Midwest. Um, they have enough technology to get around all this. Let's jump to labor. I picked a staffing company for my labor, and I'm gonna stick with these trades. I mean, the reports here. Once I get set in my 10 basic asset classes, um, then I'm gonna go play. But this is what you need to do as an investor: um, is cover the basics. This is what we're doing here. This is a whole new thought process for me, and I'm sharing it with you. Labor. Relatively low unemployment rates generally coincide with inflation rates above the Federal Reserve annual targets. However, in recent months, that has not been the case. Unemployment has remained near 4% for 12 months, while inflation has hovered around 2%. Because the unemployment rate falls to account for those who have voluntarily withdrawn from the labor force. I'm going to stop there because I hear this time in, time out, over and over. Um, oh, the unemployment doesn't include people that drop out. There's more unemployment. Okay, we got that point. They're addressing it here. We all know this now. I really don't want to hear about it again. We all know. Um, but back to the article here, or back to the report. U.S. policymakers have been assessing the feasibility of using complementary measures to gauge the labor market when adopting monetary policy. In labor market, not overly tight. Demographically adjusted measures shows economic letter Federal Reserve Bank of Dallas, December 2018, Carlos Zarazanga and Emil Mikulov examined with Heather the labor input utilization rate can help better gauge labor market conditions. I'm going to skip over that. Highlighted by the demographic influence applied by baby boomers retiring, the actual LIUR was 1.5%, below the demographically adjusted LIUR by the second quarter of 2018. Also noted is the counter baby boom tendency for modern day workers to spend more time working. And durable goods. I went GE. They just had a settlement. Um, U.S. government lawsuit. I forgot what it was, what they settled for. But as soon as they settled, the stock went up, and like I would say, an hour after that, I was able to acquire some shares, um, and was able to ride that along with the market going up. It was fantastic. Um, but as we're looking at here, durable goods are expected to increase by 0.8%. Um, Maybe I left a little bit too much out of that article before I put that here. Um, a maximum of 2.5%. Uh, and then we're coming down to, and this is something I really wanted to address with long term investors. And also, day traders. I mean, these are things, it would be smart to look at. Um, Numbers of residents in the millions in the U.S. Um, we're hovering around, 2019 right now. So this is 2020. Number of residents in the millions is 334.5 million residents by 2020 will be in the U.S. Um, I'll show you that figure here. I'll read this little tidbit here. Um, the current population of the United States of America is 328,125,008 as of Wednesday, January 30th, 2019, based on the latest United Nations estimates. The United States population is equivalent to 4.27 of the total world's population. The U.S. ranks number 3 in the list of countries and dependencies by population. The population density in the United States is 36 per stat killer mile, um, 93 people per mile, per 2 miles, maybe. The total land area is 9,147,420 kill miles. They got the square miles there, 3,531,837 square miles. 83.9% of the population is urban. I mean, there's a lot of open space in the United States. Um, 276 million, um, 62,331 people in 2019 at the median age in the United States, 37.8 years old. This is what I'm getting at. If you're looking at a target market to be able to hone in your investments, so your trading, this is it. There's a summary. The population will grow by 58 million in 2019. That's huge. Through childbirth and immigration. Unauthorized immigrants, 10 million. Authorized immigration, 1 million. Overall immigrant population is older than the US born population. The median age of immigrants is 44 years old. Most children of immigrants are born in the United States. Newborn children in the United States will be 41 million. That's your target market. Baby food, diapers, children's clothes. That's where you want to focus your retail market. And as these people get older in age, then they're going to want cell phones, computers, shoes. Any of you, I've had children, you know, um, still have children. They're not children anymore. But what I'm getting at is if you're a new investor and you're young, you're in your 20s, that's your target market. This is 41 million people that are going to go to school, grow up, take school loans, maybe not, buy cars, need diapers, baby wipes, baby food, formula, all these things. Um, and this happens every year. So, I mean, I think hopefully I'm not over explaining things, but I think that anyone that is listening to this for any amount of time is going to understand what I'm talking about. Um, and overall, um, I really want to get to this, and then I want to get to the applications here. Um, Geoeconomic 3.0. In 2014, the demographic model predicted a Trump like administration being elected. Trump represents a change of order. In 2000, I'm sorry, in 1991, the capitalist model merged into one liberal banking financier model. So the capitalist model, we had the United States and the Soviet Union, so the socialist and the capitalist model merged in 1991 when the wall came down. In 2008, it became apparent that growth was slowing. The global banking model split into two. One side, the liberal banking financiers, and the industrialists, isolationists on the other side. The industrialists are trying to dismantle the current economic system and replace it with one that is more sustainable. In 1991, the collapse of the socialist model gave the capitalist model a new lease on life at the expense of the old socialist system. The liberal banking model lost control of the printing press because Obama and Trump, as you can see, refused to hand the printing press over. Donald Trump is a continuation of the Obama economic policy. That's done. I don't want to hear about it again. We know this now. Okay, same thing with the unemployment numbers. They're trying to find a new way to gauge it. They know that people have dropped out. Okay, and they're making their adjustments. So we can pretty much trust the Beige Book in what it's saying. And we can base our trading on that. And that is the end there. Let's get to some. Let me go ahead and do some house cleaning here on this laptop, and let me totally want to open up some stuff. It's a good old weed bull, guys. Okay. All right, what we're looking at here, and I'm probably going to skip over a lot of the models today, the MACD and whatever. Staffing company, NASDAQ. So A-Team SOG is basically what's traded on NASDAQ, assets that I hold. Um, eBay, like I said, takes care of my retail. ACT, advisor shares, that's my tobacco um, ETF that takes care of my agriculture. FITB, um, forgot what. Hold on, take a look at them real quick. Oh yeah, this takes care of my banking sector, um, my financials, and basically Bank Corp is financial holding company, conducts principal lending, deposit gathering, excuse me, processing and service advisory activities through banking and non-banking subsidiaries. So I sort of have my non-financial and my financial wrapped up in one uh, ETF here. Um, and they deal with consumer loans, leases, various types of deposits, your payday loans, automobile loans, credit card, consumer loans, and leases. So, staff on NASDAQ, that's my staffing company. Um, or my labor, it covers my labor, is what I should say. I bought this on Friday, beginning of trading. So, I told you, already said it. By mid market, I was set. And as you can see how the lines converged, um, basically K, D, and J. And I went ahead and bought and did well. At the end of the day, they maintained convergence um, till the end of trading. So it was good to buy until the end. Like I said, I'm not going to go through this totally. I just wanted to explain a little bit. So we went through, um, and I'm still trying to maintain my spread across the market. Um, as far as Nasdaq, S&P, and um, New York Stock Exchange. Um, B Team SOG. This is everything that I'm trading on the New York Stock Exchange. As you can see, I repositioned myself in DRV. It's up 2.05%. I bought GE right after the announcement. They settled with the government. It's up 0. What's that? 300s or no? 0.03 or 0.30 hundredths of a percent. Um, my DRV is down in extended trading. That's worrisome. But we'll see what happens to open the market Monday. Definitely. Definitely C team. BNDX is so flat. That's why we're seeing. I'm predicting that if people are coming out of the bond market and back into the market. So I'm expecting on Monday for the dollar to probably be back in the low 26s again. I've just recently, in the past month, seen it go into the 95s and mid 95s, mid to low 95s. Um, VVIX, as you can see, is everybody's going long on the market, which is great. That means there's confidence. And VIX is delisted, which is really worrying me. Um, Even though I just saw a report from COBE, and they're saying that the VIX is going to recover this week. Um, I don't have much to say on that. It's good that the market that has confidence, but also you want balance. So I'm happy I sold out of VIX 2 weeks ago. Um, we'll just have to wait and see on that one. And oil, um, derivative, OL or OILK on the bottom here at 20.52, up 2.40%, which 2.4 hundredths of a percent. Sometimes I don't like the way this reads. Um, 4 tenths of a percent. I'm sorry. 2.4 or 40 tenths. Um, and I expect oil to go lower, definitely, as the dollar gets stronger. But we'll have to really wait and see what happens on Monday. And Monday, I don't really consider that. It's a trading day, but I really don't. Things don't get into full swing until mid Monday, the end of Monday, and the beginning of Tuesday. I mean, if you do this for any amount of time, and since I'm already here talking my head off, um, Friday, unless it was something rare like last Friday, because people cashed out of the market, the report dropped on Wednesday. Everybody was busy at the end of Friday. Um, Usually, the people want to go home early, and Friday, the market is going to have a natural dip um, on any other Friday except for last Friday. Um, these are just regular indicators that I keep up. Um, UDN is a US dollar, um, which I'm going to take off here because I already have that, right? And a US dollar bullish. This was something I was running before I could understand. Before I understood a lot more of what I'm understanding now. DRN, obviously, that's real estate bullish. It's down. I'm going to leave that there for now. Those are my regular Dow Jones indexes, 7th Cav, and that's something new, D-Team SOG. So, let me go ahead and go to something else I've done. Sort of kind of simplify this game for me. Um, Nasdaq ended down on Friday. It still didn't affect me. That was well, it affected me. It still didn't put me in the red. That's what I wanted to say. What I want to say. Um, I've cleaned this up a little bit. I have a little bit understanding of what I need to be doing. Financial sector, real estate, um, inverse, and what I'm looking for is okay. All right. Anyways, thank you for tuning in. I will put the transcripts, the link to the transcripts, in the description. Um, appreciate you tuning in. These are the applications. This is the analysis. Those are the stocks. Today we got to look at the Beige Book in depth. You'll be seeing another one of these long drawn out reports in March. I'll give you an update when the Beige Book is coming out. I gave you my analysis. My It's not my take, but what I've learned about Globalism 3.0 and Industrialist 4.0. Um, uh, Deeper look into how to trade asset class, what's important to the current administration, the Fed. Um, Overall look at population growth, demographics, target market. Um, like I always say, and there's no beer of the week this week. Sorry, no time. Um, I I don't hope this has been informational for you. I know this has been very informational for you. But these are the applications. Those are the stocks. That's the technical analysis, um, market analysis, geopolitical analysis. I totally appreciate. Please like, share, subscribe to Stock Review. You guys have a nice day.
Hell yeah, I'm here. Made it.